Hello, I'm Noelle Lim on ASEAN Speaks by Maybank. Central banks in Indonesia, the Philippines and Vietnam have raised interest rates by more than expected to fight inflation and manage the currency. Our economists consider the impact on economic growth, including a look ahead into Malaysia's budget 2023 and the possibility of a technical recession in Singapore, while the Sing dollar remains a safe haven currency. We also review the uptick in Singapore's medical tourism and Malaysia's new automotive roadmap. Winson Phoon, our head of fixed income research, moderates the call.
Hi, good morning everyone. It's 8 o'clock on Monday. A quick recap for last week. The US Fed hike rate by 75 bp, and the hike was largely expected, but the new dot plot or the so-called forward guidance turned out to be more hawkish. Global risk sentiment plunged. The S&P 500, Euro Stoxx 50 and Hang Seng indices were all down by about 4 to 5%. Global energy prices also fell sharply. The WTI fell 7% to below $80 a barrel. Base metals and agricultural commodity prices were also mostly down last week. On FX, US dollar continued to rally. Euro dollar down further from parity, currently at about 97 cents of a dollar. The pound dollar also appears to be heading toward parity, currently at about 1.08. And the sharp weakening of Japanese yen triggered the first intervention by Japan since 1998. We have Andy later to comment on this. The market currently is pricing in the Fed funds rate to peak at 4.7%, and that means about another 150 bp increase from the current level. The US Treasury yield curve inversion deepened. A 2-year, 10-year spread currently at minus 52 bp, which is the deepest level since the early 1980s. This is even deeper than before the dot-com bubble burst in 2000 and deeper than before the GFC in 2008. And an update from the UK, government announced a controversial mini budget with huge tax cuts after the BOE said that the UK may already be in a recession. The market reacted negatively on concerns that it will push up inflation when the central bank is trying to contain price pressures. And there's also a question on the UK government's fiscal credibility because the stimulus will be financed with huge borrowings. The currently market pricing is that the BOE will hike rate to 5.5% by second quarter 23. And in ASEAN, both the Philippines and Indonesia central banks also hike rate by 50 bp to support FX stability and contain inflation. On COVID restriction update, Japan will ease border control measure in October, resuming visa-free travels and remove the daily cap on arrivals. Hong Kong announced that it will end mandatory hotel quarantine for international arrivals from today. Looking ahead this week, economic data is light for the region. We have BOT, a rate decision on Wednesday, and China PMI on Friday. But we'll watch out for Fed official speeches because there is a very long list of FOMC participants to speak in the coming week, including Chair Powell and Vice Chair Bernard. This morning, we have Suhaimi on Malaysia budget preview and US FOMC update. Joey, Dr. Zamros and Brian on rates for Indonesia, Philippines and Vietnam. Harbin on Singapore inflation and interest rate forecast. Andy on FX, Eric on Singapore healthcare, and also TJ on Malaysia auto. Let's start with Suhaimi. Suhaimi, FOMC meeting last week, the 75 bp rate hike was the third straight increase of this size by the Fed, and the FOMC dot plots is also revised higher again. What is your interpretation on the latest Fed action and our expectation going forward?
Good morning, Winson. The third 75 basis point interest rate hike by Fed and the upward revision to its guidance on Fed fund rates path or the dot plot signals Fed is willing to incur some growth and unemployment pains for gains in achieving the 2% inflation target, given that headline inflation remained at high single-digit level, despite coming off the peak in recent months, while core inflation picked up again last month after easing in the preceding 4 months. So we expect Fed fund rate targets to increase by another 125 bips in the remaining 2 FOMC meetings in November and December, from current 3 to 3.25% range to 4.25 to 4.5%. And it will increase further to 4.5 to 4.75% range early next year. And as a result of putting more pedal to the metal on rate hikes, Fed bump up its unemployment rate forecast to 3.8% and 4.4% for the final quarters of 2022 and 2023, from around 3.7 to 3.9% range previously, while its fourth quarter 2022 real GDP forecast is slashed to 0.2% year-on-year from 1.7% year-on-year. And Fed also trimmed its fourth Q 2023 growth number to 1.2% from 1.7% on a year-to-year basis.
Away from the Fed, and you wrote a report on Malaysia budget preview. And firstly, before going into budget 2023, what is the budget progress this year? Is the government on track to meet the 6% deficit goal? And looking ahead for budget 2023, will it continue to be expansionary on expenditure spending? And if so, can the government still achieve fiscal consolidation?
For the first 7 months of this year, government's total revenue rose 21%. 248 billion ringgit, and we estimate full year revenue for 2022 to be 276 billion ringgit. That's 18% higher than budget 2022's original forecast. So this is mainly due to the positive impact of higher commodity prices on government coffers, especially the oil and gas related revenues, as official crude oil price forecast is revised to $100-$120 per barrel against budget 2022 assumption of $67 per barrel. And to recap, Petronas recently announced additional 25 billion dividend to the federal government on top of the budgeted 25 billion. So this total of 50 billion is the second highest on record after the 4 billion ringgit dividend in 2019. Spending wise, government's total expenditure first 7 months of this year rose by 4% to 196 billion, and we expect this year's total spending to come in at about 14% higher than budget 2022's original allocation, largely due to the larger subsidy bill of almost 80 billion currently estimated by the government against budget 22 allocation of 31 billion. Obviously, the biggest single factor here is the fuel subsidy cost of almost 42 billion ringgit. Deficit in January, July this year, about 48 billion ringgit, around half of budget 2022's deficit projection. We think 6% budget deficit to GDP target for this year can be achieved, largely because the higher than budgeted operating expenditure for subsidy is virtually covered by the commodity price driven rise in revenues. But for budget 2023, we think it will be, in quotes, less expansionary, in the sense that budget deficit to GDP will drop to 5% after being in the range of 6 to 6.4% of GDP in 2020 to 2022. The lower budget deficit to GDP ratio expected for next year mainly reflect two key factors on the expenditure side of budget. First is the expiry of COVID-19 fund that has accounted for around 1/3 of budget deficit in 2020 up to this year. Second is the expectation of lower fuel subsidy, hence lower growth in operating expenditure because of the expected transition to targeted from blanket fuel subsidy, and our view that budget 2023 will assume lower average crude oil price of $80 to $90 per barrel next year from the $100-$120 per barrel this year mentioned earlier. But the expiry of COVID-19 fund and the fuel subsidy saving enables a third year of double-digit growth in gross development expenditure, or GDE. So this is in line with the outlook of peak GDE in 2023-2024 based on the 12 Malaysia Plan's allocation of 400 billion for the period 2021 to 2025. I think as far as the areas of focus for budget 2023, as usual, will be on infrastructure. I think there are three areas of focus within infrastructure space. First is the usual business of making sure progress and completion of ongoing major physical infrastructure project, as well as rolling out new ones. So I guess we'll have to keep an eye on announcement with regards to MRT3 because MRT2 is completed and going to be operational in January next year. Second is there will be a lot of digital infrastructure capex for 5G network rollout. And thirdly, the government do need to bridge the infrastructure development gaps between states. Other areas of focus will be on domestic food security, affordable housing, supporting tourism recovery, human capital development to address the issue of labor market supply and demand mismatch and shortage of talents, as well as putting in more money to improve the quality of essential public services like education and healthcare. I think budget 23 will also be SME friendly. We expect measures like raising taxable income threshold for the 17% SME income tax rate from 600,000 to at least 1 million ringgit. And we do see more allocation for the various SME funds and soft loans for technology adoption, productivity enhancement, integration into global supply chain, food security, and sustainability or ESG transition. Consumer staple sector should benefit from this budget in view of the recently announced civil service salary increment and special payment for next year, as well as the expected enhancements to existing handout and financial assistance programs. I just want to highlight on taxes. I think Malaysia may adopt the 15% global tax on MNCs. Major tax wildcards in budget 2023 are GST and Cukai Makmur. But we do not expect GST implementation next year, but foresee budget 2023 messaging on the need for GST in 2024, i.e. after the next general election. And right now, our sense is market is still nervous about the risk of Cukai Makmur being extended into next year, despite MOF stating that it is a one-off tax measure in budget 2022.
Thanks, Suhaimi. We'll move to Joey. Last week, in addition to the Fed, regional central banks in ASEAN, we also have Indonesia, Philippines, and Vietnam hiking rate. We'll start with Joey. Joey, BI hike rate by 50 bip. It is the last central bank in ASEAN 5 to tighten, and Governor Wajir was previously sanguine, expecting no big rate hikes. But this is already the second consecutive meeting that BI surprised the market. Why a sudden switch in gear?
Good morning. The switch in gear is probably due to the two major events preceding this month's meeting. Firstly, there was the hike in subsidized fuel prices by 30% starting 3rd of September, which we estimate would add around 2 percentage points to headline inflation. And secondly, of course, the US Fed's more aggressive rate hike projections for this year, just the day before BI's meeting. The governor, Perry, stated that the decision was a front-loaded and forward-looking step in order to lower core inflation and bring down inflation to the 2 to 4% target range by the second half of 2023, as well as to help stabilize the rupiah amid a stronger US dollar. He highlighted that core inflation and inflation expectations could rise this month amid second-round effects from higher fuel prices, as well as stronger consumer demand. September inflation will be out next week. We are expecting a jump to almost 7% for headline and 4% for core.
How many more hikes do we expect for the rest of this year and next year?
We are expecting the BI to hike by another 50 bips in the fourth quarter. That would bring policy rate by year end to 4.75%, followed by another 75 bips in 2023. To 5.5% to counter surging inflation in the coming months and to support the rupiah. And despite a more aggressive Fed and fears of a synchronized global recession, we are still upbeat on Indonesia's growth prospects. Our GDP forecast is at 5% for this year, given its domestic-oriented economy and the commodity windfall, which continues to boost its external balance and fiscal revenue.
Thanks, Joey. We move to Dr. Zamros. Philippines Central Bank also hike rate by 50 bip. What are the key takeaways from the meeting?
Hi, morning, everyone. Last week, BSP raised the policy rate by another 50 basis points. We pushed the policy rate right now to 4.25%. And this was the fifth rate hike so far this year, with total 225 basis point rate hike. Basically, BSP is taking the view that the economy can accommodate reasonable tightening tightening of the monetary policy stance on firm demand. We already know that the first half of this year, the economy expanded 7.8%, and the monthly indicators in the third quarter continue to show firm growth momentum in the third quarter. Secondly, BSP with the firm demand, BSP will continue to focus on anchoring inflation expectations. BSP marginally raised the inflation forecast this year to 4.6% from 5.4% last month, and for next year they are looking at inflation to average at 4.1%. Slightly higher than the 4% they expect last month during the policy meeting. And interestingly, they are looking at the headline inflation to fall below the 4% upper target range by the second half of next year. And finally, BSP continue to support the timely non-monetary measures by the national government to address food supply issues. And the recent move is on the approval of the sugar order number 3, which is the approval to import 150,000 metric ton of sugar to address the domestic supply issues, mainly from the poor harvest and the allegation of hoarding by traders. Winson?
How high do you think Philippines interest rate can go?
Yeah, with the latest move by BSP last week, together with the zero output gap expected this year versus negative last year, on top of the pressure on peso performance against US dollar, and headline inflation rate expected to stay above BSP target range until the mid of next year, we expect BSP to raise the interest rate maximum to 4.75% by the end of this year, and to stay unchanged for next year. Winson.
Thanks, Zamros. We'll move to Brian on Vietnam. The central bank also hiked rate by an even larger 100 bips. It appears that central banks are trying to outdo each other on rate hike. Was it a surprise to you, Brian? And why the sudden big increase? Will this hurt the domestic growth, you think?
Yeah, morning, Winson. Yes, it was a larger rate hike than expected. My forecast as well as the consensus forecast was for a 25 basis points hike this year. So the rate hike, aggressive rate hike, comes primarily in response to weakening currency due to aggressive Fed tightening and foreign selling of local stocks. We hope that the SBV's rate hike would rein in depreciation pressures. The authorities are concerned that unabated depreciation would exacerbate inflationary risks. The Vietnamese dong has lost around 4% of its value against the US dollar year to date, despite the SBV having sold around 13 billion US dollars. That's roughly 11% of its foreign reserves year to date to defend the currency. To the extent that the selling pressure on the Vietnam dong eases, the rate hike may also reduce the scale of FX intervention needed to stabilize the dong, stemming the loss of reserves. The Prime Minister had asked the SPV on 22nd September, hours before the rate hike announcement, to consider raising interest rates following the third consecutive rate hike by the US Fed of 75 basis points. As for the economic impact, we do not think that the rate hike would have a significant impact on domestic growth, given that the Prime Minister actually requested banks to keep lending rates stable to support the recovery. In addition, although the aggregate credit growth cap remains unchanged for the year, the SBV had raised credit growth caps in early September for some banks which met their requirements on interest rates and management of bad debt. And this would actually boost these banks' lending and provide support to the economic recovery. We are therefore maintaining our GDP growth forecast at 8% for this year and 6% for next year, respectively. Winson?
Do you expect more hikes ahead?
Our base case is for the SBV to stand pat for the remainder of this year after this month's aggressive move, as we think that the authorities may not want to over-tighten and dampen the recovery. However, risks to our interest rate forecasts are admittedly tilted to the upside, as suggested by remarks made by the governor of SPV. The central bank will be watching closely how the dong performs in the event that selling pressure on the currency continues to intensify despite this 100 basis points hike. It is possible that the SPV may choose to hike further. For next year, we expect an additional 50 basis points of rate hikes. This would take policy rates to 50 basis points below pre-pandemic levels. The SPV, we think, will remain on a hiking bias next year to avoid being behind the curve vis-a-vis other regional central banks amid the Fed's aggressive rate hikes. But the central bank will also likely be cognizant of the need to maintain an accommodative stance given the rising global recessionary risk, which threaten to adversely impact domestic growth. Winson?
Thanks, Brian. We'll move to Harbin on Singapore. Last week, the core inflation data showed that it went above 5%, and headline inflation also increased to 7.5%. What are the key drivers, and when do you think inflation will peak?
Hey, hi, morning. That's right. Inflation was still red hot in August. Core inflation climbed to 5.1%, mainly driven by fast increases in prices of food and services, and headline jump on a sharp pickup in private transport costs. What's worrying as well is on a month-to-month basis, core inflation actually went up 0.5%. Headline on a month-to-month basis went up 0.9%. That's even far higher than what the numbers that we see in the US. I guess I'll just highlight a few components that's kind of stands out. Food prices continue to accelerate despite the UN fall in the global food index. Both prepared meals and non-cooked food all went up. But the food inflation in hawker centers and restaurants are now rising at 14-year highs, I think reflecting the rising wage pressures as well amid a tight labor market. So I think given this, we'll probably trust the government's guidance that they think that inflation will probably peak in the fourth quarter, led by lower energy and electricity prices and softer demand side pressures from a probable technical recession. We'll get manufacturing out this week, and I think I'll be looking up, but I think we expected to confirm that Singapore probably fell into a technical recession defined as 2 consecutive quarters of negative Q&Q growth. On the electricity prices, just bear in mind that our electricity prices are set on a quarter late. So fourth quarter electricity prices will be based on the third quarter energy prices, and that of course has plunged.
Does this mean MAS have to tighten again on the Insomnia in October?
I think that leaves MAS no choice but to tighten again. So we are looking for tightening, but via just a recentering of the Insomnia to the prevailing level. The prevailing level being about 1.5% above the midpoint. We are not expecting a double move, which some strategists are looking at, which is both a recentering and steeper slope because of the likelihood of a technical recession.
How about Singapore interest rate? What is our latest forecast, and also linking to mortgage rate, how high do you think it can go?
So given the more hawkish Fed and the steeper trajectory of the dot plots, we are raising our interest rate forecast by another leg for Singapore. Bear in mind the 3-month SIBOR has already just crossed 3%. And this number just about a year ago, it was 0.4%. Yeah. So if you see your mortgage installment rates go up. So 3-month SIBOR now, we're looking at 3.8% by the end of this year. And we're looking at 4% by the middle of next year. That implies roughly that the mortgage rates for Singapore could be around 4.5% if you're on a floating package by the end of this year, and 5% by the middle of next year. I mean, these are mortgage rates that we have not seen in about 20 years for Singapore.
Thanks, Harbin. We'll move to Andy on FX. Andy, US dollar strength. Is long dollar the only game in town?
Hi, morning, Winson, everyone. I think the dollar sort of trajectory, in our view, I think is continuing to likely to continue to climb a bit higher even over the next few weeks and probably into some parts of fourth quarter. So, in some ways, to answer your question more directly, indeed, yes, I think dollar could be the main game in town for now. But like what Habin and others have mentioned, in particular in the region, there could be some other possible safe haven currencies like Sing dollar. We could potentially be a form of play as well relative to other currencies as well. So indeed, the dollar would be continue to be supported, particularly also because of the euro weakness and sterling weakness. In part, if you look at it from a trade weighted perspective as well. Winson.
On pound and yen, pound dollar fell by a huge 500 pips last Friday. Do you think it is heading to parity? And also, what is our view on the Japanese yen after last week's intervention?
Okay, on sterling, there's the developments out of sterling is quite in some ways unique because of the extension that it's seen on Friday and probably into this week as well in terms of sterling weakness on the back of UK chancellors on the fiscal front, and the fears of recession actually are continuing to weigh on the sterling. The uncertainty around BOE's next move relative to the hawkish Fed actually continues to lead to make the sterling weaker in our view. I don't think it will go to parity in the very near term as yet, but I think there are risk catalysts that we want to look out for. In particular, BOE needs to assess because it is actually facing a much easier fiscal policy out of the UK government now. It had actually moved to a 50 basis points move the last time when it passed off a very tighter move. I think there's a clear risk of a 75 basis points increase in November. For sterling, I think there are two-sided risks in some sense. So they have inflationary pressures, which seems to be very persistent. I think they require tougher action. So any delay or pause on the BOE's front may impact the sterling. At the same time, I think they could be potentially spooked by recession or weakness in economy, and at the same time, could potentially be limiting their number of future hikes. On the yen, quick answer to your question, dollar yen, I think with the intervention, which has been effective last week in some ways to restrain excessive speculation, our view is I think it probably will remain in the 140 to 145 range for now, because so far it's probably going to give a threshold about 145 to 146 for speculators, and that may dampen, add in some caution to some speculators. So I think 140 to 145 is our view for now for that range to stand for now. Thanks, Vincent.
Thanks, Andy. We'll move to Eric on Singapore healthcare. Eric, medical tourism, are we seeing a return of international patients in Singapore, and how does it compare with pre-COVID?
Hi, morning. Yes, indeed, we are seeing some foreign patients streaming into Singapore since April this year, especially after the borders restriction was eased and the removal of entry approval requirement. While no official data was released by the authorities, I think most healthcare providers are seeing more patients, especially from the neighboring countries, partly due to the pent-up demand of returning foreign patients already familiar with Singapore. Powered to the pandemic, medical tourist arrival in Singapore was estimated at around 500,000 a year. As many as 50 to 60% come from Indonesia alone, followed by Malaysia and China. And historically, we understand that foreigners make up about roughly 30% of the volume load at Raffles Flagship Hospital. So management expect foreign patient numbers to continue to improve if and when China further relaxes its quarantine requirement. In a way, this will also increase the group revenue intensity, given its average bill size can be up to 2 to 3 times higher compared to local patients, as these foreign patients usually come from more complicated surgeries. Winson.
Thanks, Eric. We'll move to TJ on Malaysia Auto. TJ, you wrote that car sales volume could set a new record this year. And can you give us an update on the sector, and also what is your thought on the recent announcement on Malaysian national energy policy and also the roadmap for electric vehicles?
Hi, Winson. Car sales for Malaysia so far till August are still doing very well. I think these are practically fueled by high bookings. Many took the opportunity to book new cars prior to the end of June to still enjoy the SSP holidays. So if you were to look at August sales, they did very well. They sold about 67,000 units. It's up 36% month on month. And if sales were to average just 63,000 for the next 4 months, i.e. from September to December, then we could reach 100,000 units per day. So to date, 8-month sales have basically reached about 147,000 units. On the new energy policy, I think the NEP, in short, the low carbon aspiration as well as the electrification push, particularly for the auto industry, is very misaligned. Why we say that is that there's one statement in the NSP that conjures a lot of ambiguities, confusion, to name a few. So the statement says that 38% of cars will be electric by 2040. So this is where all the confusion comes in. Does 38% refer to EVs on the road? Or does 38% refer to battery electric vehicles, or which includes hybrids as well as plug-in hybrids? So if it includes the latter, which is a hybrid or plug-in, it doesn't tie in with the low carbon aspiration because these cars still emit carbon. For every 1 liter that they pump in, it emits 2.3 kilograms of carbon dioxide. And we all know that road transportation makes up one of the largest carbon emitters per country, which is the second largest in the world. So what does 38% mean? Does it mean that Malaysia will still produce combustion engines or ICE in short? Or is there no policy to discontinue these combustion engine policies? Because if we were to look at worldwide now, they have basically moved forward and they have formulated policies to end ICE vehicles on average by 2040. So if that is the case, Malaysia is very lagging behind ASEAN countries in terms of attracting FDIs. There is the need for us to basically future-proof our auto industry with regards to electrification. So there is no, I mean, if we don't have that, I think we'll probably fall back behind.
Thanks, TJ. Thanks everyone for joining the call. Have a good week.
Speak to your financial advisor to get specific investing advice. You may also download our reports on the Maybank Trade app. Have a good week ahead. I'm Noelle Lim on ASEAN Speaks by Maybank.